What's going on, guys? So, Roblox reported earnings today. A little bit of worse than expected earnings. Stock sold off a little bit in the after hours. We did touch lows of around $20. We closed today's session at $23.19. Currently now kind of recuperating a little bit of that initial sell off. But what I did is I marked the lows down here so we can see when we go to the daily chart, kind of see where that puts us. So that puts us below this level of demand. This level of demand here is the linear regression channel 50. This is a bottom channel level that's going to stretch all the way back here. The last time that this area was tagged, and it really wasn't really tagged, but almost in that vicinity, was in the middle of March. And then the last time that it was tagged was really when we broke above it, all the way back here. In 2021. So with that being said, you can see when we broke above it, we kind of just were riding high, riding high, riding high, kind of going sideways up and down. And then we had that big spike up here, and then we kind of came all the way back down, almost tested it, and now we've broken this channel line here. So one thing to kind of keep in mind, as that price on earnings did come below this channel line and below the lows of around $21.65. It's something to be a little bit concerned about. Overall markets are in a bear market. Now, could these markets start to turn around? 100%. I think that the markets will come back around. I just don't know if, what's tough for me is that I know how it's going to go. The minute we get, one big green day or, a couple consecutive green days, everyone's going to be calling for the bottom. Okay, everyone's going to be saying, bears never learn. That was the end. The bottom is in. Load up, load up, load up. And then a lot of times, what's going to happen is they'll get to an area of resistance, an area of supply, and then it'll start to trickle around. And then the market will go into like a little bit of a week-long distribution where it's kind of not going up, but it's not going down. And then you get that next wave of selling that kind of takes it through the lows. Now, my personal opinion, and again, this is just an opinion, but I think that we could be looking at lower prices across the board, not just with Roblox, but across the board until at least mid to end of summer. Okay. I think we'll get a little bit of a U-turn, with the inflation and the interest rate hikes more towards the end of summer, early fall, which is going to give a lot of these stocks a lot of breathing room. Now, once that happens, there's going to be tremendous value down here at the bottom. So a lot of people don't want to miss out on that opportunity. So you're kind of starting to load in now, or you're kind of starting to, get anxious about seeing prices this low. Now, one thing that I do kind of want to point out to you, whether you believe in the company or you don't, everyone has their own opinion. But if we kind of look at the weekly chart here, do you believe that with Roblox's earnings and the valuation and everything that the company has going on with the metaverse and this, that, and the other, do you believe that Roblox was $141 stock? Do you believe that it's worth $141 a share? Okay, because obviously since then the market does not think so. So what I'm saying is, yes, could it be oversold? Entirely possible. Could the market actually be correcting itself down to these lower prices that it should be at? That's also entirely possible. So we did have a lot of areas of demand, a lot of support right around the $72 area. Now, when we broke this 200-day moving average on the weekly time frame, this is when things started to get drastically more violent for the stock. One thing that I do want to keep in mind is that when and if the market starts to turn around, because bear markets are not forever, okay? Some of them are longer than others. But with that being said, is when the market does turn around, how much is Roblox fair value going to be? Is the stock price, between, let's say, $30 and $50 fair value for their metrics? or is it 141? Now, if you have high conviction that the company is going to make it out of this and just continue to, get stronger and continue to generate more revenue and be a company that's going to last for years and years and years and years and years, and you believe that, down here at $21 is a great price, well, then definitely do your own due diligence and add a little bit of shares here. But also don't get upset that if the stock, maybe over the next 12 to 18 months only makes it up to $50, $65. There is a major reset going on with a lot of stocks across the board, and that reset is going to bring these stocks to fair value. The reset, the bear market that we're having right now, this correction that we're having in the overall stock market is going to bring a lot of these stocks into fair value, meaning that they are going to create new ranges. And what does that mean? We will bottom out eventually on Rblx. The time could be near. I could see maybe $13 being an absolute low price for the stock. But if that is the absolute low, right? And this is just hypothetically thinking, if let's say $13 is the bottom out spot, right? Through the end of summer, $13 at one point in time gets tagged, it's going to create a new range, right? Now, the range necessarily might not be a recovery that does something like this. Okay. This might not be the recovery path for Rblx. Okay. So the point that I'm trying to make is Rblx's new range, once we come out of this bear market, could be something like this. And just continue to trade in this range for a long time. And when I mean a long time, maybe 2, 3, 4, 5, 6, 7, 8, 9, 10 years. And if you don't believe me, take a look at a stock like Cisco in the dot-com bubble. At one point in time, Cisco was valued more than Microsoft. And after the dot-com bubble collapsed, to this present day, Cisco CSCO ticker symbol has not made it back to those prices ever. So what that means is I'm not, and again, I'm just using a complete reference point here, and I'm not saying that Rblx is going to be like Cisco, but if we say, okay, for the sake of this video, if we say that happens with some of these stocks, then that doesn't mean that Rblx needs to come all the way back up here. It just means that, yeah, you might have a great buying opportunity down here, but if your expectations are way up here for the stock, you can't get upset if this becomes the new life expectancy for the stock in this range. Okay, because we are going through a reset and stocks are going to get valued at the proper valuations. So, and it might be 20 years before Rblx comes all the way back up here. Now, mind you, that can be completely shifted and completely, non-valid. The market has done crazier things. And, we've seen this kind of thing happen before in 2008 and stocks came back and went higher. We've seen this happen in March of 2020 when we quickly bottomed out in that very, very short-lived bear market and rallied back higher. And we can see the same kind of thing in Rblx as well. But I want to just paint, a basic picture for a lot of you guys who may be holding this stock. So for example, if you're holding this stock somewhere between, let's say, $120 and $75, okay, let's say this is your average price. This whole zone here, you were buying the dip, buying the dip, buying the dip. You ran out of money, so you could not buy the dip. You could not buy the dip. You could not buy the dip. And maybe you got a little bit of money, so you want to buy the dip here. But your overall average is somewhere in this zone. So the problem that a lot of traders and it's going to be retail traders are going to have is that when the market does finally get over this bear market and a stock like Rblx comes back up into this zone, this could be the new range that we trade in. So, will you ever recover your money 100%? It's entirely possible that you might not. Depends on how much you've averaged down during the process, and it depends on how much free cash you've cleared up by, let's say, taking hedge positions against your longs. So, for example, one thing that I like to do, if I'm holding something long, or if I'm sitting around the round table talking to my buddies about this, and let's say, they've got a bunch of shares in here, right? They've got a bunch of shares in this zone. One thing that I like to say is, well, if we're below the 50-day moving average, and as sure as heck, if we're below the 200-day moving average on the weekly time frame, take a short position, buying some put options against your shares. So what does that mean? Maybe you load up 10, 15, 20 contracts 12 months down the road. Okay. 12 months down the road. If you were to take, leaps for, 1 year out and take 20 contracts of those, essentially this whole year, you would have been riding those contracts all the way down and making money all the way down. So all of that money that you were able to recuperate, okay, can now be funneled back into averaging down at these lower prices, if that kind of makes sense. Or you can completely take the money and go on a vacation or do whatever you want. But the point is that, at least you were being proactive. Okay. If you're in this range, at least you were being proactive when the stock was going down versus, having an average price in this zone and kind of just watching your portfolio bleed and bleed and bleed and bleed and bleed. If you're managing your own portfolio and you're managing your own money, you need to be proactive in how you manage your positions. You cannot just let your positions bleed out. If this bear market was to last 12 months, 18 months, which I don't think that it's going to last that long. I think it'll be closer to maybe 6 to 9, 6 to 10 months, something around there before we finally bottom out and start to come out of this. But in that meantime, if you're not actively managing your position to where you're watching and hedging your position and making additional cash flow in that process, then you really don't need to be sitting here, asking everyone on social media, what should you do? When is the stock price coming back up? Then just forget about it. Come back in a year and take a look at your shares. But the thing is that, if you have high conviction in a stock, and especially, since we're talking about Rblx, if you have a high conviction in a stock like Rblx, then you definitely need to be averaging down on your position, but you also want to make sure that you're going to be in an average range where you'll be able to come out of this trade or investment profitable. Okay. So I would definitely recommend your average being underneath 75. That's the 50-day moving average. And if you can get your average price between, let's say, 50 and 70 is even better. Okay. Because if Rblx does come out of this, I think that you will be able to benefit between that $50 and $70 range. Okay. If you can get your average share cost, between that $50 and $70 range, you should be okay when we come out of this process. Now, that doesn't mean when we have one green week, right? One green week is not going to take us from, $20 all the way back up to 70. It's not going to work like that. You're going to have ups and then you'll have downs, and you'll have distribution, you'll have ups, and then you'll have a back test, and you'll have distribution, you'll have ups, and you'll have a back test. It'll be a slow, drawn out process. But the moral of the story is that if you are in this range, and let's say we never make it back up to this range, well, at least you dollar cost averaging down here is going to help get you in a lower range, so that when and if we stay in this range, you will still be able to come out of this investment or trade profitably. With that being said, guys, if you like this type of video, please make sure to subscribe to my YouTube channel. Also join my Discord. That link is down in the description box below, and I will see you guys all in the next video.